Please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Hi, a very good morning. You're watching Trading Hour on CNBC TV18. I'm Ekta Batra. With me is Prashant Nair, and it's turning out to be a weak start to the week, and no pun intended there. So we have the Nifty, which is down around 0.5%, the Bank Nifty, which is down around 1% and the reason for that is obviously what's happening in the currency market globally, and particularly the Turkish lira, which has bounced back a little bit from the low, but nonetheless it has fallen over 40% in terms of depreciation year to date. So the Asian markets are worried this morning, and you have most of the markets which are pressured, and that seems to be percolating onto our markets. The dollar rupee, or the rupee rather, fell to a record low as well, but it has recovered from those levels at this point in time. So just keep your eye out on the rupee. 69.46 is where it's at. A lot of stocks in focus. We'll be discussing that through the course of the show. Stocks such as Tata Steel coming out with numbers, SPI, GAIL reacting to it, HDFC Bank on the back of news and that conference call that took place. So a lot to discuss. Even Fortis ahead of that EGM later this evening. Hi, Prashant.
Ekta, hi. I mean, in a way, what we are seeing today is continuation of what we saw on Friday and last week, because after 2 or 3 weeks of straight run and strong gains, the markets gave back some of those gains last week, especially mid caps and small caps. So, I think it's just a function of having run up the way we did, especially on Nifty, and also, mid caps and small cap indices. At one point last week, I think mid last week, the small cap index, for example, had gone up for about 12 trading sessions, unbroken run, before it finally cooled off a little bit. And, those indices are up about 8%, 8-9% from the recent lows. So I think not too much to read into what is going on as far as this bout of profit taking that we are seeing. And we're already off the lows. 62 odd points lower on the Nifty. The Sensex is down about 218 odd points or so as we speak. I think, it's also a lot to do with currencies. The trouble with emerging market currencies, the South African rand, the Brazilian real, the Turkish lira, it all happened a lot of it happened towards the close of last week. But, the rupee outperformed. The rupee actually was one of the strongest currencies in the EM pack. And today, I think, along with the rest of everything, rupee is also giving, some way, although I think it's off the lows at about 69.46. Yeah. It's just sort of going with the flow in that sense. Broad theme has been dollar strength, so as to speak. With specific currencies like the lira, it said the Turkish lira, there are specific country-specific issues which you are all well aware of. We've been discussing those. But there is also this broad dollar bid which has been there for some time now. Okay, let's bring in Sudarshan Sukhani of S2Analytics.com. He's with us. Sudarshan, good morning. Good to have you here. Your reading of the 60-point fall that we're seeing on the Nifty, and what would you do?
Yeah, good morning. Well, the 60-point fall has come on the back of very weak Nifty performance on Friday afternoon. And this is always a question whether it's a minor correction and the uptrend will resume, or whether this will lead to a bigger dip. Given the fact that world markets are also joining hands towards weaker values, I think we need to wait. It's too early to call this a small dip and go and buy. So my suggestion in the morning and even now is avoid the indices completely. Do not expect this is bargain hunting. It may be and it may not be. We do not know for sure at this point of time. So avoid doing any bargain hunting in the indices as a short-term trader. Stocks will keep on offering opportunities. Stocks will tell us to buy or sell, and sometimes both are valid. So I have 2 short sells for the day, and they are intraday trades. One is Max Financial, which has been weak and weakening day after day, and the second is Z Entertainment. Both are for short selling, and both are available for the intraday trader to go short in as we speak. The third trade I have is to buy. I think that's very easy. It's Mindtree. IT is going up thanks to the weak rupee, and Mindtree is an outperformer. So Mindtree is a buying opportunity. Broadly, it's not a day to go deeply into the markets.
Okay. Sudarshan, wanted your thoughts in terms of how you would approach Sun Pharmaceuticals. That stock is coming out with its numbers tomorrow. It's up ahead of that, and it's in fact above its 50-day moving average as well. Does that hold any significance?
Well, yes, it tells us that the stock is coming out of a long bear market, and the very fact that it's above the 50-day moving average tells us that the short-term trend is up. Now, Ekta, you are much better judge of numbers and how stocks will react and what will happen to them. But I would say that if there is a minor correction in Sun Pharma, it's an excellent buying opportunity.
Okay. All right, Sudarshan, we're going to let you go on that note. Thanks very much for joining in. Let's, in fact, cut across to Balram Yadav, who's the MD of Godrej Agrovet, addressing the media on the back of their numbers. We'll cut back to it and get you some key highlights from it. It was overall quite a sedate set of numbers. The revenue was up around 10-odd%. The margins were just about flat on a year-on-year basis at 9.1%, and the profit was up around 6-odd% for the company this time round. So that's on Godrej Agrovet, just about 614 rupees. You can see a bit of a sluggish reaction coming in on that stock. But let's get in some more F&O strategies then. We have Rahul Shah joining in from Motilal Oswal, who's with us now. Rahul, over to you then, stocks and index call.
Yeah, hi, good morning. I think way the markets have been functioning last few sessions, I think a straight run up of 5% and before we saw a sell-off on Friday towards closing and today. So till now I think we have been outperforming the global markets and we've been doing quite good. So I think large cap stocks have been doing quite well. So from the large cap space, two stocks along which I prefer from the current level as well. So in that space, we've seen tech stocks doing quite well. So I think TCS looks attractive from that level, from the current levels. It's trading around 2000 or so. So I think with a stop loss of 1965, I can buy TCS with a stop loss of 2080. Second is ITC. ITC again, it's broken out and it's come out from the range of 285 to 300 levels. So I feel that ITC can go to 320 or so from the current level, keep a stop loss of 298. And one short idea, I think Tata Motors, I think this stock you've seen continuously sell off since last 3-4 series. And I think still can slide more from the current levels. So one should go short on Tata Motors with a stop loss of 256 and a target of 230.
Okay, we will speak again, Rahul. Thanks very much for your time. Appreciate it. Okay, welcome back. So 0.5%, 0.6% cut on the benchmark indices. Mid-cap index is doing a little better. The Nifty Bank is doing a bit worse. Manisha is joining in with what's happening with currencies because, we've got order of magnitude moves coming in on many currencies as well, including the rupee, which is selling off. Manisha, morning.
Oh, well, absolutely, Prashant. We've been tracking the Turkish lira, and while almost everybody, all the bankers and global currency analysts that we have been talking to do tell us that it is a standalone Turkey case scenario and it perhaps wouldn't impact the global currencies. But as of now, the sentiment clearly seems to have dampened. If you look at the South African rand, that declined by 10% today. We did see the Turkish lira go down yet again 12% on the market open itself, and we did see levels beyond 70 coming in for that one. The Indian rupee has opened on a record low yet again. 69.61 has been the level onto that one. Of course, we've seen the prices come off those kind of lows. There has been suspected intervention by the public sector banks, and that, of course, has been supportive. So 69.48 on the last count, and we did see, as I said, prices going down all the way to 69.61 as well. It is the safe havens really which have been doing quite well. So whether you look at the US dollar index, which is trading at a 13-month highs, or the Swiss franc or the Japanese yen, these are the currencies to keep an eye on really. Even gold hasn't been able to perform. We have seen it decline constantly, $1,205 per ounce at the last count, clearly not taking into the account the geopolitical financial concerns rather that the markets are facing with at this point in time. The other currencies also in line with the decline, whether it's the pound sterling, which has continued to decline, or if you look at the euro, which is trading at a 12-month lows, Canadian dollar trading at a 2-week lows. It's a similar scenario for the commodity currencies as well. So no place to hide really, whether it's the EMs, Asian currencies, commodity currencies, high-yielding currencies, all of them have started Asia in a negative note today. But Devesh Divya now joins us to talk more about that. Devesh, hi, good to have you. What is your sense really, first of all, to begin on Indian rupee? With the kind of decline that we have seen, would you say it's in line with the currencies? Would you call it a one-off, a knee-jerk reaction, or do you see more concerns come in?
Well, I think there is definitely more concern on the horizon for a number of emerging market currencies. I think INR is not going to be an exception. I think we are in a situation where external factors are clearly playing a much more important role than domestic factors. Domestically, I would think that fundamentals are relatively stable, even though we have had a widening of trade deficit. The rupee has also weakened in line with that. So I think domestic factors are relatively stable. External factors, as you pointed out, the spillover impact from Turkish lira is having quite a negative impact on a number of currencies. And in that kind of scenario, you would expect INR to not remain insulated as well. So I think there's probably going to be more weakness in the rupee in the near term.
What are your ranges really, Devesh? Do you see a breach of 70? Because most people do expect that.
I think it's only a matter of time before 70 breaches. In terms of our forecast trajectory, we were looking for a move towards 70 by the end of the year. But clearly, given how the situation in Turkey has unfolded and the negative EM risk sentiment that we are seeing now, we could see some overshooting of that level in the short term. The key question is, how much does RBI intervene and how strongly do they want to protect the 70 level? I think there will be some intervention. They might supply some dollars, but given that this is not just an INR-specific move, there's a broader EMFX move, they might just allow a 70 to breach as well.
Also in the international markets, how real are these contagion fears or risks really?
I think it's actually quite real, and I think most people are focusing on two main risks from Turkey. One is, Turkey is still almost $1 trillion economy. Turkish assets, Turkish bonds are part of important global bond indices, and from a global fund manager point of view, of course, if you have your assets down 40% year to date, that means that you would cut risk across the board. I think that's one angle. The other angle is, of course, there's huge amount of liabilities amongst Turkish corporates. So corporate debt as a percentage of GDP is 60%. Roughly half of that is in foreign currency, a large part of that being unhedged. So I think there's spillover risk from that as well. If there's systemic defaults in Turkey, that could have implications for European banks, for example, and that could have, again, spillover for the rest of emerging markets as well. So I think the risks are quite real here.
Okay, so risks from Turkey pretty on the higher side, and rupee breaching 70 really is quite on cards.
Okay, all right, Manisha, thanks very much for that. In fact, we have other currencies such as the South African Rand, which is at around 2-year lows in today's trade as well. But concentrating on stocks back home, PVR is in focus as the company has expanded its reach in the South Indian market. It's going to acquire SPI cinemas for a total amount of around 1,000-odd crores. We have Ajay Bijli, the CMD of PVR Cinemas, who's joining in to discuss this transaction. Mr. Bijli, hi, thanks very much for joining in. First, if you can just start with, the revenue and the margin synergies that you see from this particular acquisition and your comments on how this is actually going to be earnings accretive from year one.
Yeah, because it's already running a business with 68 screens operational. They do a turnover of about 300 crores. They will finish in FY18. And going forward, it will be about 400 crores. It's a very profitable circuit. In fact, their EBITDA margin is 20.4%. And so therefore, and they reported already an EBITDA of 63 crores last year, going up to 90 to 100 crores next year. So it's value accretive because it's straight away a profitable circuit that we are acquiring.
Okay. Mr. Bijli, I just want a couple of more details on the internals. The total cash consideration is around 633 odd crores. We understand funding is via debt of around 150 odd crores and internal accruals. But the presentation does say there is 100 crores which is deferred based on some certain milestones. What are those particular milestones? And in case of that, what are the milestones for the issue of shares for that balanced 28% stake? Just take us through the fineries.
No, there's nothing like that. First of all, in such a large transaction, mostly all CPs are always met, but one or two things are always something that can be done only post-transaction. So those are the milestones which, once they're achieved, this 100 crores also will be released. And this is, and as you rightly said, 1.6 million equity shares are being issued, which is part of the deal. So that those are not milestone linked or anything like that. It's subject to merger. When the merger gets approved, and that's the time these shares will be issued. And the residual, and basically 3%, roughly 3% equity will be held by the current promoters of SPI.
Mr. Bijli, could you talk to us a little bit about the expected revenue performance, margin profile, etc., that you expect from SPI, overall impact on PVR's revenues and margins as well?
Well, PVR's revenues FY18, basically we're looking at about 2,400 crores roughly, and they are at 300. So basically 2,800 crores is the FY18 revenues, and the EBITDA would go up to about 550 crores. Going forward, we're looking at, if we go by the current run rate, so the EBITDA will be about 100 crores of SPI, and PVR's own, is just now only the first quarter is over, and so we'll be looking at a good number, consolidated number going forward.
And the one-off margin impact for PVR, I mean, in this financial year FY19, as you bring this chain into PVR, you consolidate things?
As I said, both companies are, running at a good EBITDA margin. We finished our year with 18.3% last year, and SPI finished with 20.4%. So the margins are only going to improve because, they run at a very high occupancy of 58%. PVR runs at 32%. South Indian market in any case is very, movie friendly. There's a huge content diversification that happens over there. As you know, 50% of the overall box office revenues in India come from South Indian films, which is Telugu, Tamil, Kannada, and others. So I think overall the number of people who visit cinemas in South India and the number of movies that get watched over and above Bollywood as well as English is much more. So keeping that in mind, it's going to be a very value accretive acquisition.
Okay, on the F&B side, I mean, could you tell us your expectations from the Mumbai HC, the High Court with respect to outside food? I mean, we know that the Supreme Court has stayed the J&K High Court order.
It's a sub judice matter, and this call is not about the F&B matter. So I'd like to restrict myself to the SPI.
Okay, Mr. Bijli, thanks very much. And we hope to speak about the other matter, which is also on top of mind for many in the market, for investors at PVR and, I mean, other chains as well. But that's PVR on essentially the back of the acquisition they've done, SPI Cinemas coming into PVR fold. We will take a very quick break here. I mean, for now, 66 off on the Nifty, 11,363 odd is where we are at. So the other big story, I mean, which we've been discussing from the morning essentially has been with regards to banking. We have SBI and HDFC Bank both under pressure. We know the news flow, SBI earnings, HDFC Bank, of course, Mr. Suthankar at HDFC Bank leaving, and the call this morning where Mr. Puri answered questions.
Well, a lot of financial stocks in focus today, and besides the earnings corner, there is HDFC Bank, which is in focus after Deputy MD Paresh Suthankar resigned on Friday evening. It took everybody by surprise, and there was a conference call which was held this morning as well by Aditya Puri, where he addressed a lot of concerns and questions. Abhishek Kothari was listening into that conference call, and he has all of those important takeaways. Abhishek.
Well, to begin with, Ekta, Mr. Puri did mention that, they understand the concerns surrounding Paresh Suthankar's resignation. So they have given, he did mention that it's a most graceful and exit, and there's no acrimony, surrounding to his exit. Sad to see Paresh Suthankar go, and it's a loss for the bank is what he mentioned. The board will take a decision on the replacement of Mr. Suthankar in next 10 to 15 days. Paresh Suthankar was a contender for the post of MD. Remember that, you know, the MD's post will get vacant in October 2020 as and when Mr. Puri will step down. The bank, however, as a mark of respect, will no longer have the post of Deputy MD in terms of HDFC Bank. Back to you.
Okay, that is HDFC Bank for you, 1.5% lower as we speak. State Bank of India is also the other one that we're going to talk about. It's losing 3% or so after the losses on Friday. First quarter missed expectations. Abhishek, I mean, what is the considered opinion of the street, especially brokers, post the SBI numbers, the commentary, the call, etc.?
Well, three key points, Prashant. To begin with, slippages outside watch list remains elevated. We did highlight this during the results as and when it had come. There is strong recovery which will sustain over the next few quarters due to NCLT recovery as and when they happen. However, the loan growth is a worry factor which remains weak. So brokerages have trimmed down their expectation of FY19 earnings. Macquarie has cut their FY19 estimate by 24%, Deutsche Bank by 14%, Nomura by 85 to 90%. However, largely brokerages are bullish on the stock. They have a target price ranging from 340 to 370. Macquarie is the only one to have a neutral rating with a target price of 281. Let's listen into the management as to what they have to say about their performance.
I'm expecting that at least we should be able to recover on an average 30 to 35% in list 2. So there is excess provision in my view on NCLT 2. But because of the aging provision, that's how it comes to 79. A lot of things are inside, decisions are coming, 2 judgments came on Friday, another one we are expecting this week. Some of the cases are at various stages of adjudication. So list 1 should mostly be out by 30th September. This year we are doing a small parcel sale for SBI General as a precursor to IPO next year. And cards and mutual fund are also on the agenda for the next year. If not double digit, but maybe around 8%, because second half is where the real credit growth picks up. But there is a very big pipeline for the State Bank of India.